Funding for Market Journal is provided by the Nebraska Soybean Board.
A diesel-powered engine on a farm works hard and operates in a grueling environment. Soy biodiesel fuels stand up to the challenge of powering farm equipment, but are also renewable and environmentally responsible as well. The Nebraska Soybean Board is committed to encouraging the use of soy biodiesel to protect the environment and sustain Nebraska's agriculture. The Nebraska Soybean Checkoff, growing opportunity from the ground up.
Market Journal, television for making agricultural business decisions, is a presentation of the University of Nebraska-Lincoln Extension, where you can know how, know now. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this first episode of the new year, Roy Smith looks at corn and soybean markets ahead of the January crop report. Aaron Berger analyzes the cost of buying replacement heifers for producers restocking their herds. Ronnie Green discusses the progress UNL's Institute of Ag and Natural Resources made in 2013 and looks ahead to opportunities and challenges in 2014. And Brad Lubben outlines free trade talks in the WTO and Trans-Pacific Partnership. Roy Smith is our marketing analyst this week. The USDA is scheduled to release its latest crop report next Friday at 11 a.m. Central. December's report didn't provide much market movement, but some analysts believe January's projections could make a bigger ripple. We talked with Roy Thursday afternoon. As we talk on Thursday afternoon, it's been a bad day for beans. Any diagnosis?
A bad day for beans and a bad day for people standing outside, too.
That's true, yes.
Well, I guess what I would say about it is that dead cat bounce has been one of my marketing strategies for the last 20 years. And this year's dead cat bounce pretty much followed a pattern that's close but not quite, because what was different this year is that we actually had two harvest lows, one around the 1st of October and the other around the 1st of November, and in between we had two bounces. Mm-hmm. The first one was, I guess I'd say, a little subdued. It took prices up around 50 or 55 cents a bushel, then fell back, made a new low, and then made another run, which I thought was leading us to $13 a bushel in the cash market here in Cass County. But we missed it by about 8 cents, and since then the market has been pretty much on a down trend, and as of yesterday and Tuesday, really in the tank, more or less.
Yeah, if you're still holding those cash beans, what price would you maybe try to target to sell at?
Well, there's two ways of looking at that. One of them is to put a stop loss order under the market, and let's just say if it gets back to $12 or less, get out of them no matter what. My experience with that strategy hasn't been very good, because usually that ends up selling at a depressed level and then coming back. But the other thing that I would look for is, just looking back on the original dead cat bounce, look for 50 cents a bushel over the harvest low, and if you get some sold there and you still got a few, set another target at 75. I think that might be a little optimistic. I actually even think this 50-cent rebound might be a little optimistic.
So you think maybe $13 is out of the question?
Well, it's one of those things where we've been talking about the fundamentals justifying $13 beans. We've been talking about that for 4 months. And we actually made a run at it, but didn't quite make it. And I think it's probably one of those situations where what everybody knows ain't worth knowing, and that the $13 prospect is probably not realistic considering the psychology of the market today.
How about on the other side of the road? If you still have some corn left, where would be the maybe opportunity to find some profit?
The corn situation's a whole different situation, and a couple of weeks ago we heard an analyst at the soybean days in Wahoo, and gosh, I don't think I've ever heard anybody so depressed, or so depressing. There's a couple things you can look at. There is a carry in the corn market. The market's saying that we don't want your corn today, but we might need it next summer. And so we've got the bid for next summer higher than the current bid. And it's the first time in 3 or 4 years where we've had a very large carry. We've had to carry before, but pennies. This time we've got 15 to 20 cents carry between March and July or August. And so if you want to be guaranteed some storage return, we want to be guaranteed a more or less break-even price for the corn, you can either cash forward contract it or sell the futures and store the cash. The risk there is that if the cash drops, you're really not locking in much of a profit.
I believe the analyst you're talking about is Darren Newsom, who is a little grinchy, perhaps. What about next Friday, the USDA's report? Any advice on what might happen there? The January crop report, in some years, we've seen the cash price and the futures price rally going into that report, with farmers thinking that it's going to be bullish, and then it's not bullish and the market drops. I really right now don't know anybody that thinks that report's going to be real bullish, so maybe there will be a bullish surprise in it. That would be my hope, that after 3 or 4 months of extremely low prices in the corn market, that there might be room for a little bit of a rebound from, if nothing else, from an oversold position, because the market's just been so depressed for so long. Next week, we'll look at cattle markets with Mike Briggs. Later this month, the USDA will release its now yearly report on cattle inventory. The most recent data on U.S. cattle, which was released February 1st of last year, showed the lowest inventory of cattle and calves since 1952. Continued drought in states such as Nebraska will likely show strained growth when new estimates are released January 31st. But with cheaper feed and less severe drought, some farmers and ranchers might be thinking about retaining or buying heifers to expand herds. Late last year, we talked with UNL Extension educator Berger to discuss how a producer can determine what to pay on a bred heifer. We started by asking Aaron how much of the cow herd we may have lost from a multi-year drought.
Probably the best numbers we're looking at is somewhere around 5 to 10%, and that's really a significant number when we look at the number of cows that we have here in Nebraska.
If you're going to think about buying that bred female to slowly restock the herd, what are some things that you want producers to keep in mind when they go about trying to determine if they're going to make a profit off of that animal?
Yeah, when we talk about what we can go out and afford to spend for a bred female, whether it be a bred heifer or a mature cow, we're really thinking about a value that an economist would refer to as a net present value. And when we talk about net present value, what we're really thinking about is what is the productive ability of that cow, what we would expect to get from her in terms of weaned calves. And so what we want to do is go through and think through all of the cost and revenue that would be generated from the purchase of that cow. So we're looking at that cow's productive life. Probably a real fair average is somewhere around 4 to 5 calves. People frequently think about that cow that has 8 or 9, but on average, around 4 to 5 is going to be an expected productive value from a cow if we're purchasing a 2-year-old bred heifer. The other things we want to think about is annual cow cost, and we want to adjust those also as we look forward for inflation and expected increases that are going to occur in production cost. The other thing we want to think about is any death loss that we would incur, as well as projected revenue in terms of the calves that we would get from that cow and the value of those calves. And then finally, we want to think about what is that cull cow's value going to be when she leaves the herd. The other thing we need to take into account is a term that economists call the discount rate, or what would that cow's investment be worth if we were to put it in some alternative investment. And so here we're really looking at an interest rate in terms of the capital investment that we would expect to get in return on that cow's purchase value.
A lot of those things you mentioned, Aaron, are estimates at best because you don't exactly know how things are going to pan out or what the market will turn into. How do you manage that risk of the estimates?
Yeah, I think when we think about estimates, we can look at some projected forward prices as we look forward to the future. obviously those are anyone's best guess. And so I think we look at historically where we've been at, looking at what the beef demand's been doing, and then also just looking at the position of the cow herd in the United States right now. We're at historic lows in terms of cow numbers. There appears to be good demand for calves and feeder cattle in the near term. The corn market has gotten back into a rate that seems to be a little more reasonable from a cattle feeding standpoint. So I think you plug all those things in, and then honestly, you just go out and you start taking what you see as your best estimates based on those information. There are two spreadsheets available that I really think are excellent tools. These are Excel-based spreadsheet tools, one from Kansas State University and one from Oklahoma State University, that really help a producer, I think, walk through and put all of the projected revenue in, as well as the projected cost. And I think the thing that's valuable about these tools is you can go in and play some what-if games, see how that changes, what it would estimate you can afford to pay for a bred female. And then I think it really also just helps you do diligence as you consider the purchasing of bred females under today's current conditions.
How timely is this conversation, Aaron? Do you have producers maybe out that way that are starting to think about buying that bred heifer to get back in the game?
Yeah, we are really having some people take a hard look at. We've had some good moisture this fall. That's encouraging, I think, folks to be a little more comfortable as they look towards forage production from native range and pasture next year. And we also have seen some of these harvested feed prices go down, and as well as the good weaned calf prices we've seen this fall, as well as feeder cattle prices. Folks are looking at the opportunity to maybe get back in, start to rebuild the cow herd, and are seriously looking at how they can get back in and purchase bred females.
The kicker on this, Aaron, might be the tight stock of bred females. How hard is it to find those replacement heifers?
You know, I think there's a lot of good demand right now for bred females. Obviously, the area of the country that's gotten some moisture, or where we've seen moisture improve, has a pretty big impact on this. Even to the south and to west of here, we've seen improvement. And so we're seeing bred heifers right now anywhere from that $1,800 to $2,400 per bred female. You know, those are recent market prices here in western Nebraska, eastern Wyoming. And that kind of tends to be what people are willing to pay. And so it appears that there's going to be good demand for those bred females going forward.
The spreadsheets Aaron mentioned from Kansas State and Oklahoma State can be found through a link on our website. As we mentioned in our previous episode, UNL Extension is offering a series of workshops on ranching for profitability in 2014. Those meetings will take place at 8 locations across the state in January. You can find more information on presentations and registration on the beef website at beef.unl.edu. Ronnie Green is the Harlan Vice Chancellor within UNL's Institute of Agriculture and Natural Resources. You may recall the Institute is in the process of hiring more than 30 new tenure-track faculty members in high-impact areas. We sat down with Ronnie towards the end of December to talk about IANR's outlook for 2014, including the recent hiring initiative.
Yeah, we were pretty lucky, I think, amongst land-grant universities in agriculture, which for the last several decades haven't really been in a great hiring mode, or at least in growth mode, I would call it. And we were able to be in that position this past year. We spent a lot of time planning for how and where we needed to expand our faculty across all sectors of ag and natural resources at the University of Nebraska. And we're fortunate enough to be in a position where earlier this year we started recruiting 36 new tenure-track faculty members. And by new, I mean growth, additional, above and beyond where we'd been. So really the first time in 40 years we've had the opportunity to grow like that and grow our faculty resource. So 2013 was the year we really got after that and sought out the best applicants. I think we ended the year with about 30 of those hired and brought into the picture already, with the remainder to be finished up in early 2014.
One of the things that agriculture is really focused on right now, and has been for the last year or two, is trying to get a new 5-year farm bill. There are obviously multi-components to a farm bill, and one of them is research. From the university standpoint, describe the importance of getting that component in a new 5-year farm bill.
Well, the research title of the Farm Bill is certainly very important to the university system around the country, especially important to us here at Nebraska because of the emphasis and priority on agricultural research by the university. So there are a couple of key components of that authorization of the Farm Bill. The hatch funds that fund our experiment stations throughout the state and our greater research enterprise and the Institute of Ag and Natural Resources are part of that authorization. Smith-Leber funds that fund cooperative extension throughout the state, significant part of that authorization. And then on top of that, the competitive grants program that fund competitive research proposals in USDA and the National Institute of Food and Agriculture are part of that authorization, and we compete for and receive quite a large number of those competitive grants. So all of that's wrapped up in the authorization of the Farm Bill, and of course appropriations that then come on top of that. So we're watching that carefully to hopefully here to see that happen and come back to us. And then we're also very concerned about the future of that funding, the long-term future of appropriations for agricultural research, extension, and education at the federal level that have been declining for a long time over the last couple of decades historically.
You'll have a Huerman lecture coming up January 14th. Can you just give me a quick outline of what that entails?
Well, that's the topic, really, of that lecture. So coming up here shortly, in our next Huerman lecture, we've invited in a panel to discuss really what's the future of the agricultural research, education, and extension enterprise in the U.S. Where are we competitively against growing interest and investments in China and Brazil, and in particular in those areas? So that panel includes former Secretary of Agriculture Dan Glickman. It includes Kathy Wotecki, who is the current Undersecretary of USDA that oversees all of that part of the department, the Research, Education, and Economics branch of USDA, and Phil Pardee, who is a University of Minnesota ag economist, who's done a lot of work looking at globally where the U.S. enterprise is. And our dialogue that evening will be, what's the future look like? What are the discussions at the national level about growing that enterprise, which is really what we need to do to meet the needs ahead for agricultural innovation. So it'll be an interesting panel and dialogue that night, January 14th. It's at 7 in the evening in the Nebraska East Union here on East Campus.
And finally, the Rural Futures Institute has a new director, Chuck Schroeder. Just give me a quick overview of what you think he might be able to not only bring to the Institute, but also to the state.
Well, we were very, very happy about having recruited and successfully brought to the University of Nebraska Chuck Schroeder, who is no stranger to Nebraska, native of southwest Nebraska, the Palisade area of the state. Grew up in the ranching business and then has held a number of positions, leadership positions nationally in agriculture and here in Nebraska. Was the Department of Ag director here at one point in his career, was with the University of Nebraska Foundation earlier. He was the CEO of the National Cattlemen's Beef Association, and most recently was in Oklahoma City as the head of the Cowboy Museum and Hall of Fame. And Chuck brings a very interesting mix of talents and background to us to build the Rural Futures Institute as its founding director. Started December 1st, so he's been on board now about a month. And we're looking forward to great leadership from him as that new institute grows, develops, and comes out of the gate, so to speak, to address rural sustainability long term.
Again, the next Huerman lecture takes place January 14th at 7 o'clock in the Nebraska East Campus Union and features a panel including former U.S. Secretary of Ag Dan Glickman. The event is open to the public and free to attend. More information can be found at huermanlectures.unl.edu. In a recent episode, you heard Greg Dowd from Commodity Markets Council discuss beef trade and the Trans-Pacific Partnership. Along with that discussion, the U.S. and other World Trade Organization members are currently negotiating in what's known as the Doha round of trade talks. According to the WTO website, the aim is to achieve major reform of the international trading system through the introduction of lower trade barriers and revised trade rules. UNL Extension Public Policy Specialist Brad Lubben joined us in late December to outline both sets of negotiations.
Well, the WTO talks, you've heard about these for a long time. They've been negotiating officially in this Doha round of negotiations since they set an agenda in Doha, Qatar back in 2001. So effectively, I know they've been at this negotiation longer than Market Journal has been on the air. It's been a while. It's been a while.
What has been the problem here? What has taken them so long?
Fundamentally, imagine this. We've come to a framework about what we should talk about back in Doha. In agriculture, that includes increasing market access, reducing domestic supports, and eliminating export subsidies, some of those direct distortions. That's just agriculture. Add in services, add in goods, add in intellectual property, big negotiating platform. And you have every member of the WTO, 150 plus, all effectively have veto authority on the final agreement. That is, the final agreement doesn't pass until everybody signs off on it. Getting all those member countries to agree to a final agreement here has taken a long time.
Now, how would you quantify the progress that they've made here? Where are we now?
We came to basically a cliff here in Bali, Indonesia, in late 2013 here. Either we did something now that forged an agreement, or we effectively said the WTO is dead. We can't negotiate in this kind of a framework. We still have a WTO agreement that was passed back in the 90s that we live by and have conflict resolution and so forth. But as far as a negotiating body, very difficult. Well, lo and behold, the WTO did in fact come to an agreement in Bali. So there is a new Doha round agreement, not just a negotiation, a real agreement. It's not particularly ambitious. They largely agreed to things that were already offered. We will look to reduce some export subsidies. So we'll eliminate sort of one category that most countries have gradually scaled back anyway. We did not substantially make progress on reducing domestic supports in agriculture. In fact, some argue we're going backwards because of some allowances made to India to deal with what they consider to be a food security and ag subsidy question. And we're making some progress in terms of market access, but still lots of barriers to trade, and maybe increasingly the barriers to trade are what we call sanitary and phytosanitary measures. We're going to claim that it's a health or environmental or other concern, and is it really that, or is it really just trade protectionism? Those are big issues. We didn't resolve any of them particularly well, but we do have an agreement that should at least enhance trade opportunities, including those opportunities for U.S. agriculture.
Let's move to another one that also could be vital to agriculture. That's the Trans-Pacific Partnership, the TPP. Where are we with that?
Well, the U.S. is one of 12 countries in that negotiation. Imagine essentially the Pacific Rim. In fact, the negotiators left Bali on their way to Singapore to leave the WTO talks and go to the TPP talks. We seem to be nearing fruition there as well. An agreement, it's not completely free trade, but it enhances the trade opportunities, increases market access. Look at Japan as an example. U.S. has been battling with Japan over some trade restrictions. One of those issues in relation to beef and the limit on imports from 20 months. Well, Japan raised that from 20 to 30. That was one of their first sort of overtures as these talks began, to signal that they were willing to consider liberalizing their trade agreements. That progress looks good. We're not done yet. That will drag into the new year. But clearly we have maybe more optimism on the trade front than we've had in a while.
Brad says free trade discussions with the European Union, labeled TTIP for Transatlantic Trade and Investment Partnership, are also underway, but he says we're not as close to the finish line with those talks. Now, with his first weekly weather forecast of the new year, here's UNL Extension State Climatologist Al Dutcher.
Well, folks, here we are again for the first forecast of 2014. I hope that you had a safe and a very relaxing holiday season. Of course, we've seen the big cold air push once again into the state, and we've seen that pretty much locked into eastern Nebraska for the last few days. We have some moderating temperatures in western Nebraska, but the big news is, of course, this large Arctic surge is going to come into the region and going to produce some very bitter wind chills. We'll easily be looking at 30 to 40 below wind chills this weekend, and we'll maybe see a slight moderation as we get into next week. So let's get right to the forecast and see how this is going to progress as we go through this next 7-day period. And I'll draw your attention to the upper air charts. Here's a trough that's brought the first surge of cold air in today, and then there's another push that's going to come behind it. So basically the temperatures that you see this morning are likely going to be the highs, and then will drop as the day begins. There is a possibility of some upslope flow generating in northeastern Colorado and the southwestern panhandle, and possibly even get into extreme southwestern Nebraska, where we may see some light flurry and maybe even some light snow accumulations, particularly as we get into tomorrow. as the cold air really starts to push down toward our south, and we do see that there is some energy moving up against the mountains. So this is the best likelihood for accumulating snowfall in Nebraska would be extreme western Nebraska. In eastern Nebraska, we're probably looking more at flurries and maybe just trace accumulations. But the big news is as this system moves toward the east, another powerful storm will generate across the northeastern United States. So as we go into Monday, big flow of Arctic air coming down. We're going to be very hard pressed on Sunday and Monday in northeast Nebraska to even get above the 0-degree mark. But you'll notice this ridge starts to build back up, and it looks like some warmer temperatures may build into western Nebraska, and we may actually start to move into the 20s on Monday, and much warmer conditions if this forecast is correct. As the cold air moves off to the northeast and generates a fairly significant snow, we'll start to see some warmer air pushing into our region on Tuesday, and that trend will continue all the way in until Wednesday, when we do is get a slight cool down, but we're not getting that big Arctic flow coming into the region. This is more Pacific in nature, so if we do see a cool down, it's only going to be a few degrees, and there is a chance for some light snow accumulations across extreme western Nebraska. Now, as we get into Thursday, we'll see that little trough pushes toward the east, and that brings some flurry activity into southeastern Nebraska and eastern Kansas. But again, no significant accumulation expected. And as we get into Friday, we'll notice that the trough sits here over the Great Lakes region, and another piece of energy moves into the southwest. We'll be watching this for its movement as we get into late next week. And right now it keeps it south of Nebraska, but we'll need to pay attention to this upper air low. Now, as we look at the temperature forecast, brutally cold conditions. We're looking at sub-zero highs on Monday across northeast Nebraska. Wind chills in the 30 to 40 to below the zero range. And overnight lows easily will be in the 10 to 15 below zero, and it might be expected to see some 20 below zero temperatures across western Nebraska. 8 to 14-day forecast from next Thursday through following Tuesday. We're looking at above normal temperatures moving eastward in terms of precipitation, a dry trend for Nebraska with another system moving across the northern plains with above normal precipitation.
Thanks, Al. Today's interviews with Roy Smith, Aaron Berger, Ronnie Green, and Brad Lubben are available individually on the Market Journal website and through our mobile app as part of the January 3rd episode. Next week, Mike Briggs will join us to look at cattle markets, and Lauren Giesler will discuss soybean seed treatments. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Facebook and Twitter. Promotional support is provided by the Nebraska Farmer Magazine. Funding for Market Journal is provided by the Nebraska Soybean Board. The Soybean Checkoff, growing opportunity from the ground up. Market Journal is produced by the University of Nebraska-Lincoln Extension, where you can know how, know now. Funding for Market Journal is provided by the Nebraska Soybean Board.
Soybeans are found on dinner tables around the world. Some form of the soybean is found in baby foods, snacks, cooking oils, and many other food items eaten daily. And soybeans provide the protein in the diets for livestock and fish. The Nebraska soybean farmers support research to develop new soy-based products for foods, livestock, and industrial uses through their checkoff dollars. The Nebraska Soybean Checkoff, growing opportunity from the ground up.